Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn & Associates with your metals market update. And this is for Tuesday, the 13th of June. And this is right now, about 1:45 p.m. Central Daylight Time. All right, friends, I am writing a gold report for you. I'll talk about it in a minute. It's going to be long-term based, weekly and monthly charts. So for those of you that like to look at gold on the longer term, I haven't done one of these in about 7 months. I decided last night to do it. I'm a third of the way through it. I'll probably wrap it up tomorrow after the FOMC meeting, publish it Thursday or Friday for you. So stay tuned because I'll show you how to get it. Gold, I think it was a pretty good performance day. Negative in a sense that the gold fell further down when it got to 1260.50 than I wanted it to. I didn't want it to take out 1261.30. That was an important number, but it still held overall. Silver finished its washout, and it got to 1670.50 and bounced away. Copper still down, and look at how they're beating up the platinum today. But let's get to the metals. You know Jeff Sessions is on TV. You know that he's testifying, and you know tomorrow you have the FOMC coming out. We know that the Fed wants to raise rates a quarter point. We know they're going to talk about what they see down the road, and we also know the economic data has not been stellar. When you take a look at the weekly chart in gold, you still have the pattern of higher lows, higher highs. On the red line, that's the 18-week moving average. The 200-week is here at 1233.40, and the 100, 1213.70. You are over all those numbers. From a longer-term perspective, this is in a bull market. It hit an upside target of 1297.10, and it has backed away. It has not broken that pattern. On a closing basis, we broke the pattern yesterday when we came down and took out this low close around the 1271 level. So right now you've got a down thrust, and the market has to readjust or just continue down if it's going to stay bearish. But you're in a down thrust on that at this point. You can see today that you extended the break through that break low, in fact, and when we put the swing line on now, you've got a higher high and a low that took out a previous low. So this big break went all the way down nearly $40, took out that low, ran out of momentum there and snapped back right on the close about $8, $9. Big deal. The damage has been done on that part of the chart. The market also ran back to the 18-day average of closes, and that's what it's been now trying to figure out what to do from. And that's so typical of charts. I view the red line as the line in the sand. It is the area that a market likes to go to when it wants to figure out what next. And that's where we're at. This what next area. Is the market going to break again and try for the 100-day average, or is it going to regroup and try to get over that average and resume an uptrend? You don't know yet. It's not telling you that part of the story. What you've got is a market in terms of Bollinger Bands that you hit the first upside number in months. You have to go all the way back to April to get into that, and then it immediately fell back to the 18-day average. Okay, so it hit its target, ran out of momentum, and people are waiting. But that doesn't surprise me in front of an FOMC meeting. Jeff Sessions is talking. I don't know what he'll say, but I doubt he's going to implicate the president, but it's always possible. And the gold is just acting neutral by hanging at that 18-day average of closes. Momentum still pointing down on the slow stochastic. On the gold ETF, GLD, today's break low at 119.92 carried the market under this previous low. So again, like the futures, and they've been going hand in hand, the market lost its uptrend, but it ran right back, and it's there right now at the 18-day average waiting to see what happened. Where the strength came in were the miners. And in the miners, you have an outside day up. Today's low of 2260 did not take out 22.49. Until today's low is taken out, the battleground now is the 18-day average and the 100. And if you can clear that 100 on a closing basis, I think the upper Bollinger Band gets into play. In addition, momentum is starting to try to turn back up. So we're going to have to wait and see what the FOMC tomorrow does to that. Gold, silver still favors the gold just climbing over the silver. At this point, you needed 72.6 ounces of silver to get 1 ounce of gold. Now you need 75.28. So the higher the number goes, the weaker silver is in relation to gold. And look what silver did today. I was in the office. I said, folks, you're probably there or very close to the bottom of the silver. Oversold, lower Bollinger Band, a big extension in this market of 70 cents. I said, I think the pros are going to start covering it, and that's what I was telling them, my brokers. In the copper market, I don't see a trend here. I see a market that's got a lower low and a higher high. Second, the market did run up to the 100-day average and to the upper Bollinger Band, and that is a sign of strength, but it completely failed, and today it goes right back to that 18-day average, hits it, got through it by 20 points. That number's 258.05 the low, 258.25, and held it. I think it's a market trying to develop a trend, and it's trying to figure out what that trend is. In the platinum, if you knew nothing else, what I teach is you get up to an upper Bollinger Band. It's where I think the pros are going to take money off the table. Go to a lower one. It's where I think the pros are going to take money off the table. You went down to the lower one. The trend is down, lower highs, lower lows. You are oversold and into a Bollinger Band. That's what I think is going on there. And, of course, the market that's been strong against them is the palladium. That's the two that are spread against each other, and I'm going to say what I said yesterday. You hit that upper Bollinger Band, I think they take money off the table, and I won't be surprised if they're unwinding these spreads soon because you've lost your embedded reading right here, a sign that something might be afoot. In the dollar index, you're hugging this 18-day average as the market's just waiting to figure out what the heck does it do with the FOMC decision tomorrow. And that's a good neutral spot, and that's what we have, a neutral market. We have a lower low, a higher high. The bias is either side of 97.02, and believe me, it depends on the moment you're looking at the market. It's on either side of it a good part of the day. So you put that together, you understand what you've got. Tomorrow's a very important day. Jeff Sessions' conversation right now as it's going on is important. And even more important is my market research to you, I hope. And the reason is I'm really going to add something this week for you, my gold report. And I'm going to focus on the monthly and weekly charts, not the in and out trade, the longer term trade for some of you that like to look at gold on a longer term basis. I've already done the write-up as to what I think the events with the Trump administration are. I've done the events as to where I think the Fed is headed. If I have to adjust it, I will, but I'm betting they're going to do their interest rate hike. I'm betting the words will be dovish coming out. I don't think September necessarily is on the table. I think you'll look between the June and July data into August, and at that point, if they're not stronger pieces of data than we have now, I think the Fed pushes back the idea of rate hikes. What is that going to mean for the market? Well, I'm going to discuss it. So what I often do for the short-term trades, I record 40 charts in the morning. When I do them, I'm throwing out buy here, sell there, do this. You can't see them on YouTube. They are guarded by a user ID and a password. You can choose your own with us, and we want to give you 20-day access if you haven't tried this before. And I think you'll find yourself with a cup of coffee in the morning, addicted to seeing this, and maybe I can throw a trade idea out at you, and then I write about the markets during the day, and you'll get those reports. For those of you that like an oral update, I even do those. Yes, I'm busy all day long. So how do you get access to it? It's really very simple. Give us a call, and that's all you've got to do at 866-973-2077. You can go to our website right here at www.iraepstein.com. That's simple enough. You'll see a carousel of free offers with this in it. You can click up here at any point on YouTube. You'll see an icon. It'll take you to the forms to choose what you want from us, or underneath us on many websites. It says click here for Ira's free offers. Click there. The form will pick up that way. I'm Ira. I'll see you at the end of the day financial video. I'm going to go watch Jeff Sessions right now. You take care.